Hi, Graham. Alfred here. How are you?
Yeah, hey Alfred, good to see you. Yeah, I'm great, thanks. Thanks for having me.
Thank you. Thank you. Looks like we're live now, so watch your language. Mind your P's and Q's, I guess. So, anyhow, let me give you a little overview, a little introduction. I'm Alfred Ritter, CEO and managing partner of Montgomery Securities. We're a investment bank, really an old name, but a new firm in investment banking. We're a digital investment bank, really seeking to originate analyze, structure, distribute financing transactions for fintech companies and other industries, really streamlining the process, reducing costs to originate, providing issuers with direct control of their cap chart, and investors in the secondary market for liquidity through utilization of technology, not only in the processing but also in the underlying security itself. Today, my guest is Graham Rodman from Archax. Graham, why don't you take a moment and introduce yourself, and then we can jump into the webinar.
Yeah, sure. So yeah, I'm Graham, CEO, co-founder of Archax. We're a digital securities venue based out of the UK. Backgrounds in hedge funds, so previous 20 years always working for institutional standard hedge funds. Most recently, the chief operating officer, chief compliance officer, and partner of a firm in London called Omni. Got interested in cryptocurrencies in 2013 and around 16, 17, 18, started to realize that there was going to be institutional demand in this market. So myself, the CTO and the CFO decided to leave and set up an institutional exchange in the UK.
Great.
I guess, and I guess just, going on from there at the start, we were focused very much on crypto and digital securities and how that market would develop. And back then, crypto was definitely still a bit frowned upon by the institutions. So we decided to focus on regulated securities pretty much from the off. We applied to the FCA to get our permissions. And 2 months ago, we received the UK's first license for a regulated digital security MTF, which is an exchange in the UK, custodian, and a broker. And then shortly afterwards, we got the UK's first crypto asset, virtual asset service provider designation as well. So yeah, we've got all the permissions that we need right now, and hopefully launching at the start of next year.
Awesome. So just I always wonder this. Your logo is a bird, right? And I wonder, and the name. I'm just kind of curious. Is there a background? Can you give us a little background on insight into how you came up with the name Archax? And is that bird a crane, I think?
You're close. So it's a dinosaur. It's the Archaeopteryx, which is the first feathered dinosaur, and Archax is a shortened version of Archaeopteryx. And when we were setting it up, we pretty much decided that originally we were going to be Raven, and unfortunately that it had negative connotations, the Raven in some cultures. So we decided, okay, we were kind of settled on a bird-like thing. We thought it should begin with an A. And the good thing about the Archaeopteryx is it's early on in evolution, much like the space that we're in.
Okay.
And once and it was one of those names that just stuck with us. So yeah, it's a shortened version of Archaeopteryx. And
I always wondered that, and I never could try to put it together. And so that makes perfect sense now. So I think that'll everybody everybody on the webinar actually will know that, and it will be a small handful of people, I think, that will actually understand what it is. So cool.
Great.
So when did you form Archax? When did you start? When did you start down this road? And kind of what was the original mission, vision, those values? What kind of share some of that with us?
Yeah, Omni Partners, the hedge fund we were at, is pretty innovative. Had a wide range of products, across a range of strategies, and we started to look into crypto and as an institutional hedge fund, we were kind of always considering, what would our investors be looking for in our processes? How will we set this up? And and certainly back then, this was probably in around 16, 17, when you started to think, okay, how will we execute trades on an exchange? How can we segregate duties between the investment manager and the middle office? Even doing that was quite a challenge. And, we just didn't feel like it would be easy to take in institutional money and say, look, we're able to responsibly look after and control your money. So we kind of identified the gap around there. From Omni's point of view, it probably wouldn't have been an institutional product right then, but from our point of view, it was an interesting space. It felt like we could add value. So that kind of drove us to leave. So at the start of 18, we set out on the journey. And, you know, we needed to raise money, obviously, we needed to build the system, but most importantly, focus on the regulation. So, excuse me, a lot of 2018 was focused on how do we go about getting regulated. So we sat down with a regulator in around summer of 18 and explained the plan. And I think, you know, they were very open. They've been open from the start. And from our point of view, we went in there with, look, we're not trying to do anything wrong here. We don't think of regulation as an evil. Actually, we think very positively about it. We think there's a reason that it evolved the way it did, and we want to embrace regulation, but we want to do it with new technology. And as we started talking through our plans, it became apparent that what we were building was a bit too big to kind of test in a sandbox environment. Running a full exchange and all of the required controls would have just been very difficult. So we decided to do a full application. We spent the back end of 18 preparing it, and then submission in early 19. And from that point, you know, we've been building the systems, the team, the thinking in parallel. Regulations been evolving, perceptions been evolving, our learning's certainly gone up, and the regulators, you know, gone on a journey with us. I mean, their understanding's been pretty good from the start. Hopefully it's even further evolved now, but for the most part, what we're doing is a trodden pathway of a regulated securities venue, custodian and broker. It's just this is a different type of technology. So, you know, that's been quite a big focus of ours. Raising money alongside it has, you know, been an interesting journey as well. You start off thinking this is quite a compelling idea. You know, when you're not doing crypto, you kind of narrow it down to people that believe in the longer transition of capital markets, and then you need to find people that understand the technology, believe in it, and don't see, you know, faster opportunities elsewhere. So it's been quite hard. Some people prejudge you and think it's crypto, but, you know, I think the education's evolved, and now actually most people understand broadly what we're doing at the start of a meeting.
We raised money for City Block Capital, which is a digital VC fund. And, you know, the second you mentioned blockchain, you know, people's mind it just split, right? And like, they're either pro or anti, and there's not a lot of in between.
Exactly.
And so it's unfortunate, because I think there's certainly a difference between, I would say, securities or digital asset securities, however you call them, and pure crypto and type of products. So, but let's not get into that tangent too much. But talk to me a little bit about, so I get it. About 18 you started, 19 going through the full application, which was a big choice. I think that was probably, you know, because you could have gone, I guess, the easier pathway, which was no little regulation, kind of jumped in more on the cryptocurrency side of things, but you chose really to stay with the regulated markets and I guess what I'll call secure, well, and stay in this world of securities, which is highly regulated.
Exactly. Yeah, and I you know, that it was a conscious decision, and I think it seems to be proving to be the right one. You know, we always felt that if you start from a kind of whiter than white, purely regulated place, you can always add unregulated products. But if you go down the unregulated product first and you start developing an opinion, or you start to cut corners on your processes, then when you go to be regulated after, it's actually quite a challenge, because people will look at your track record and what you've done in the past, whether or not that was regulated. So, you know, we understand the regulations that are required to put, you know, securities through our exchange. There's certain controls and processes we have in place, and, you know, we've tried to stay on narrative and tried to stay away from, you know, all of the exciting things that might be going on. So obviously at the moment, spot crypto's pretty hot. A few months ago, DeFi was pretty hot. You know, derivatives have been hot at times, and, you know, we always look and think, yeah, there'd be easier, quicker money there. But, you know, these are markets that are going to be around for a long time, and they're going to grow. But that, you know, the underlying securities market and the derivatives associated with that are going to dwarf everything that exists today. So, you know, we're building something that hopefully is going to grow, be sustainable, and hopefully eventually start to be able to capture all of these areas.
You know, I want to put a message out to the audience, the attendees. If you do have questions, go ahead and use the chat feature and go ahead and put them in there. And then I will address the questions later on, and we'll have a little Q&A session later, and I'll aggregate those and ask Graham. So talk to me about the business model. You mentioned brokerage, exchange, custodian. Those are a lot of pieces, right? That I guess a traditional exchange wouldn't necessarily have the brokerage and the custodian pieces, right? I mean, if you're the AIM or LSE, I'm assuming, right? And that you're kind of combining some different pieces. But talk to me a little bit about the business model, the activities, and maybe even touch on how you guys generate how you generate revenue over there.
Sure. So yeah, it's a good point, and you're right. We have a lot of different pieces, and it's great that we do, but a lot of it was just because of necessity. So when we first started out down this route, there were a few tokenization companies that were already existing, like Securities, I think Securities, Currency, all of these kind of guys were around, and there was it looked like there was a lot of people creating these tokens and distributing them, and there was an absence of a secondary market. So we thought, okay, well, it feels like there's a secondary market there. We've spent our lives working on secondary markets and the operations surrounding them. Let's start there. But then as you start building it, you realize that, well, in the traditional market, you have a lot of entities that work together to achieve front to back transactions. So you can't, if you've got an MTF, the exchanges take place, but then it goes somewhere else to settle. And you have participants that are regulated institutions, and there's trust, and there's credit, and there's clearance houses, and there's central securities depositories, and there's all of these entities that feed into making a transaction happen. And if you were to just develop an MTF in isolation, you'd be looking around for key market components that just wouldn't exist. There are no clearing houses, really. There's no CSDs that are natively blockchain. Well, that's not strictly true, Settle and ID2S, but it wouldn't be easy to bring that to market. So we kind of said, okay, well, in the first instance, we don't have a big balance sheet. We can't offer someone credit. So what we need is a custodian linked to our venue. So we were able to do that. And then we needed a way for those that weren't able to directly face an exchange to be able to access. So we put the broker alongside it. So they're all captured together. and not only that, but if you think about most traditional markets, they don't have a platform either. So not only do we have to develop a platform, an exchange, a custodian, and a broker, and all the connectivity, you've got to build all these together. So what we're really doing is building 4 regulated businesses at once, which is why it took so long. And in a way, a lot of the inspiration for this comes from a lot of the crypto exchanges out there. I've said it numerous times. It doesn't, you don't have to be one thing or the other. It's not that you believe in crypto or regulated. We can look at a lot of the stuff going on in that space and take inspiration from it. And the fact you could log into, Bittrex, Binance, Bitfinex, whatever it might be, and suddenly you're facing an exchange. They've got your positions there as custodian. They do risk management, and they check you have the funds available. All of your reporting's there. You can do your payments. It's quite inspiring to have like a little ecosystem in one place. So we're taking a lot of inspiration for that and trying to create in the regulated world, but it just takes a lot longer when you need to be regulated to do those things. You need, there's certain rules you need to follow for every single one of those entities that we're running. So it's taken a while to pull them all together, but now they're coming together. They sing very nicely together.
And I would assume that as in financial services, if as you're running the brokerage, there can be, as you're running the exchange, there can be, as other brokers stand up that are digital focused, right? Or traditional that then add digital. It's not prohibitive of them to participate in be a member, I guess, of the exchange, right? So you're just one. So you have your own branded brokerage, but you're not exclusive to them, right? That's just one of potentially many, and maybe it's giving a guideline or a model for others to follow potentially.
Yeah, exactly right. There is no point in trying to be everything. We're really not trying to be everything. We need a way to make sure that people can affect settlement front to back. And where we want to get to, everything's going to be increasingly decentralized over time. But certainly just having, pure centralization in one place doesn't make sense anyway. We want the big banks of this world. If their clients want to trade on our venue, it may be that banks are unhappy transferring their assets into our custodian, but there's no reason those banks can't trade through the connectivity directly on our platform. And we tried to build it so it can connect to third-party trading systems at banks or order execution management systems or whatever it may be. So, our first incarnation is all of us, but the second that there's interest out there, then we'll embrace those conversations. We'll have to have conversations about trade limits and credit and holding regulatory capital against anything we hold, and ultimately start to look at clearing and settlement on a deferred basis in central securities depositories or clearinghouses or wherever it may be. So you're absolutely right. And similarly on the custody side as well, we're very much focused on regulated security custody, which is very different to crypto custody. Whilst we've put a really great MPC solution in place with Unbound, we're not really honing our processes for crypto in the same way. So if we start having crypto traded, it's much more likely we'd go to one of the providers out there today and connect them into us.
Provider meaning like a exchange, or what do you mean by provider?
Well, it could either be a custodian like a Kamenu or a Fidelity or one of the providers like a Fireblocks or a Curve. All of these guys are doing really well in the market at the moment. They're starting to become credible. They're starting to get adoption. So if any one of them had a reason to connect to us, then they're conversations we can have. Yeah, and as a venue generally, well, as a company generally, we're kind of anti-discriminatory. We're not allowed to choose the issuers that come onto our venue. We're not really allowed to choose the participants. If regulated investment firms want to trade on our venue, then we have to let them. And if they come with their own counterparties they'd rather use, then we want to embrace that as much as possible. To that's the way we're going to bring liquidity to the types of securities that are going to be traded on our venue.
Sure. And then, so talk to me a little bit about, so main focus though, main product is what? Is it the secondary market? I mean, that's really the core of everything. That's the main products and services that you're providing. Just walk me through kind of some of the products and services, and then and how do you scale this and as an and then okay. Sorry. Let's just do that. Let's talk a little about products and how you scale this. You build your own internal sales. You're partnering. What's the strategy there?
Yeah, I guess to answer your last question as well, from a revenue point of view, I mean the secondary market listing and trading fees, that's kind of it. And these aren't, we're not a big crypto exchange charging, hundreds of thousands to get liquidity. Nor are we able to trade on our own venue. There needs to be market making agreements in place. So, realistic expectations on liquidity, but a listing fee and some transaction fees. But the types of companies that will list on our market will predominantly be SMEs. And by that, we mean companies basically with a balance sheet value under 200 million euros. And the majority of listings on our venue would be that. And at the moment, I'd say we see most in the space between 5 and 30 million, let's say, and they're straight debt and equity issuances. And one or two of these companies on their own, I mean, all the companies are interested, and I love talking to them, but no one's going to come to our venue necessarily to trade one or two of these illiquid securities. But certainly when we start to have a few of them, then hopefully we can start to drive more organic growth to the platform. Now, I guess if you look across most private security venues or junior markets across the world, liquidity is quite limited in a lot of cases. So we're trying to solve that, and we're trying to solve that by using efficiencies of technology. We're trying to solve it by having easier admission rules onto our venue, but obviously trying to make sure we keep the quality as high as possible. And the hope is that all of this, kind of helps this idea of the democratization of capital markets. How do you get more issuers issuing their securities to market? How do you get more companies able to raise money from capital markets? And how do you get more investment opportunities for people searching for yield? And today's unfortunate current economic environment, from a pandemic point of view, rather than the markets, is that you've got a lot of companies that are distressed right now. And kind of your gateways to money, if you're at a certain size, are probably friends and family or crowdfunding platforms. And then you've got capital markets at kind of the other end. And you've got this whole gap in the middle for people that need to raise a decent sum. And, they can go to brokers like yourself and maybe get placed, but there's a lot of them out there. So we want to try and make it so you can come to Archax. Hopefully over time, you'll be able to raise money on Archax. You can get straight to market, and there'll be liquidity, and there'll be global liquidity across a range of different investment sectors. That's kind of the vision. The vision is to, and The vision is to facilitate liquidity. We're not trying to create, hundreds of thousands of transactions every second in every security in the world. What we're saying is if it's a private equity certificate right now, it's probably not traded at all. If something's on our venue, at least there's a chance you can get a mark, you can get a liquidity event, you can create a hedge portfolio, and you think of the trillions of dollars that are out there in private equity that are traded in illiquid markets. All of that could benefit from having a place that facilitates liquidity.
So good. So I mean, yeah, you look at the size of the private securities market, and it actually, I mean, even here in the U.S., I don't know the exact numbers, but Reg D offerings far outweigh the dollars raised in IPOs, right? So it's a larger market than actually the public markets issuance on an annual basis. And so obviously, I see digital securities as being a facilitator to those groups that predominantly can't go public necessarily because they're not big, they're not a billion plus market cap type companies, so they can't go public in any meaningful way on the NASDAQ or the NYSE. Maybe they could go pink sheets or OTC. And so I see that the OTC market's kind of being replaced by this emerging digital securities business, and taking what normally would be traditionally just private offerings and moving them more towards a more public offering. Maybe it's not a full on IPO, obviously, but kind of replacing that part of the market. Do you share some of that vision there? Is that part of it, or do you see it differently?
No, I absolutely do. There's and even before you get to kind of an Archax secondary marketplace, I think there's almost a more junior market before that. There are kind of these bulletin board peer-to-peers, and selling a share certificate is a little bit difficult right now in the UK and slightly different all around the world. But even having a digital security representing ownership in a private company that I could just transfer to you, you can transfer me cash. Even that is a bit of an improvement, creating the kind of fluidity of transaction at that level. And then I guess, moving up, you get to a junior market like ours. But I don't think it really stops there. I think, beyond that, I think the large companies as well, when you look at the technology, can, when the technology evolves, when more players in the market infrastructure start to develop, then it starts to have benefits for everyone. I think if you're some of the biggest companies in the world and your issuance is digital, then performing corporate actions are cheaper, maintaining your cap table is easier, making sure that your shares aren't being shorted greater than the total shares in issuance. Those sorts of problems go away. And companies like Securities, actually, or TokenSoft as transfer agents, they're kind of right in that spot at the moment that I think is quite exciting as well, where, the transfer agent is almost updated immediately as the transaction takes place. And depending on the level of transparency you want, whether you want to look at street name through to beneficial owner, you can start to have more real-time cap tables. And you can argue the benefits from an investor versus a company point of view, but it all becomes possible. So I agree with you. I think it's the kind of lower end of the liquidity spectrum as we think of it, that's happening right now, because for those companies it's really obvious to see the benefit. But also you're seeing the major exchanges start to take notice, as well as the major players. So DTCC announced their DLT projects. Euroclear in the UK are working on stuff. SIX, LSE, most of the big exchanges are looking at it as well. And the reason is that they can see the benefits of the technology.
Well, yeah, it's interesting because you and I, before this, we had talked a little about Clayton Christensen and disruptive innovation. And clearly, we kind of batted that back and forth. And I clearly see Archax as a disruptive innovator, especially if you look at the frame of exchanges, right? And so clearly that fits, because all the elements of his theories, I think, would apply to what you're doing. So I think that's interesting in it. And so that kind of leads me to the next part, competitors, right? So obviously it's early days, so right. But you have T0 here in the US, which is technically not an exchange, it's an ATS, right? But they're also in discussions with Boston Stock Exchange our Boston Options Exchange to create a digital securities exchange here in the US. So theoretically, that would be a US, NYSE exists, right? LSE exists. So there's no reason why Archax can't coexist with the Boston Digital Securities Exchange here in the US. But talk to me a little bit about competition, how you see it, where it's coming from. I guess the big thing is, how do the incumbents respond to what you're doing, and from an innovation standpoint? So
Sure. Yeah,
go
I
ahead.
guess I guess it's the last, in fact, even the last month, the last few months has been really taken off. I guess well, just going around the world, really, over in the US, you're right, you've got T0 there. I mean, they kind of spent a lot of money to get where they got to, but looking at what they've done, they are kind of a lot of the market right now. The proposals they put forward for the Boston Options Exchange, pretty interesting. It's a really interesting read if you like reading regulatory documents. But what they're proposing,
Love it.
some of the challenges are exactly the same as most of the companies are looking at. How can you create something that represents ownership on a chain when you've got these other factors in place? And they're looking at it, and they're right at the cutting edge. And so I know it's difficult to kind of change as fast as you would want there. And then you've got Securities, who have been issuing tokens, are a transfer agent, and then recently bought a broker dealer and an ATS. Open Finance Network has, I think, been bought now by INX, who've been doing their offering lately, and they've been doing their crypto, they're doing crypto and digital, and whilst they're not regulated yet, they look like they're going to be in a similar space to us. So it's and this is all good because just pausing for a second with those US companies, this is all good because from our point of view, the way to get market makers interested is when things start trading on multiple venues. When you can start arbing between them. If you look at the number of crypto arb hedge funds that exist, it's huge, and they just wouldn't exist if there was just one venue. So it's great that the space of evolving across Europe. You've obviously got us in the UK. There aren't many. I've heard of one other that's put an application into the UK. There's 6 in Switzerland doing SDX. They've been around for a while, and I think Asia's quite a hotbed right now as well. You've got Fusang that seems to be doing really well over there, and then Hong Kong specifically, you've got BC Group, Hashkey, Hong Kong Virtual Exchange seems to be doing well. HKX are there. And there's rumors of various bits and pieces happening out in Singapore as well. And in the Middle East, I think Liquify just acquired a license out there. So you're starting to see it evolve across the landscape. And we don't I'm probably speaking to more of them than I'm not about ways we can work together. We can dual list, we can develop standards. It's very unlikely that someone's sitting there going, I've got my London property portfolio. Should I list on Archax or T0, right? And on the flip side, it's the same thing. It's much easier for a UK issuance on a UK venue with UK participants than the other way around. So, the market's going to be huge. We don't need to worry too much about them, and we also need a few of us to exist to all be pushing the same agenda forwards.
Maybe it's less competition and more co-opetition.
Yeah, exactly. And also there's different strokes for different folks. We specifically, when FCA regulated, that's going to be like, from our point of view, a kind of stamp from a great regulator that's, 4,000 people deep and has evolved some of the best regulations that are being copied globally. That was kind of our stance. And, we kind of had to climb the higher mounting, but when we turn up and people go, wow, you've got the FC regulation, you can just see the difference compared to, the other exchanges in the smaller jurisdictions.
Yeah, if you can do it here, you can do it anywhere, as the song goes. It's New York. Yeah. It was London before it was New York. So we'll take a pass on that. So that brings up regulation. You mentioned regulation. You mentioned how you're regulated. Now, do you fall under the same regulation as the AIM or LSE does, or is it a separate box? Or you mentioned MTF, and I'm not sure if everybody knows what MTF means. So maybe you give a little clarity on regulatory, how you guys are regulated, and how then you also interface with regulatory regimes in different countries, right? The US, and then also how you're kind of addressing the EU and Brexit and all that.
Sure.
A lot there to unpack, but go ahead.
No, I guess there's various degrees of how much of an exchange you are and what an exchange even means in different jurisdictions. And an MTF in the UK is not a recognised stock exchange like the London Stock Exchange. but
Okay.
the word exchange is not a protected term in the same way. It would probably be more correct to call us a trading venue in the UK. And the distinction is in the UK that if you're a recognized stock exchange, then you have to follow the listing rules in the UK. And, the listing rules are long and deep and, a really interesting read, but ostensibly, it's going to be a real problem if you're an SME to follow all of those rules and get admitted to a market in a straightforward, cost-effective fashion.
And so MTF is multi-trading facility. Is that
multilateral trading facility?
Multilateral trading facility. Okay.
Exactly. And the way that it more commonly works is that a company would go to get listed, and they would follow a larger company. They would follow all of the listing rules. They would be listed on a main market or an RIE, and then MTFs at that point are able to admit them for trading on their venue. So, Vodafone would get listed, it would appear on LSE, and then all the MTFs can then admit it for trading on their venue. Kind of like the same way all the crypto venues suddenly add the new coins that are being issued out there. But the difference with our MTF licenses, we kind of said, well, look, it doesn't make any sense for us. It doesn't make sense that we have to go to, the LSE or Aquis and say to them, look, can you please list these on your venue so we can admit it? So we've got a special type of MTF license, which means that we can allow SMEs to come directly onto our venue. So we have our own set of admission rules. So you've got the listing rules that are like this. We've got admission rules that are much more pragmatic for smaller companies. So, it makes sure that there's no market abuse. They're pretty stringent rules. And, if they pass our due diligence, then they can be admitted to our venue. So where we're slightly different to an ATS is an MTF is more heavily regulated, but shares with an ATS that it's, a trading venue rather than a recognized stock exchange.
So, I mean, if you had the equivalent in the US, it's somewhere in between an ATS and a full-blown exchange. It's more regulated than an ATS, but less regulated than an exchange.
Exactly. Yeah, that's probably right. Yeah, we're mandated to have market surveillance on all the trades on our venue. We need rules on our venue. We have to follow market making agreements. Algorithmic trading has to be tested. There's tick size rules. A lot of the rules that are put on us as a venue are close to the main market, but the admission criteria are lessened. So it's we're definitely not a recognized stock exchange, but we are under a high level of regulatory scrutiny.
Okay, got it. And then for individual like customers, we didn't finish that. Let's finish this up. So regulatory FCA, that's UK. So how do you then deal with investors from other jurisdictions? I mean, and then how do you? I mean, with Brexit coming, how do you address kind of that change in no longer being part of the greater EU and whatever that enabled you to do with the FCA license?
Yeah, sure. I guess just to try and kind of carve that out into bits as a venue, as a trading venue that allows companies to admit, you've got rules around admission. So which countries are they from? You've got rules around participants, rules on the venue itself. And then, depending how complex that gets, depends on how complex the rules get. So the most straightforward thing is obviously a UK person, the UK company on a UK venue. That's pretty straightforward. But in law within the UK, companies that settle for trading on our venue need to be admitted for trading in a central securities depository. Excuse me. So what that means is the shares have to be lodged in Euroclear, effectively, if you think about it like that. And at the moment, it's kind of UK and Ireland and the Channel Islands, but post-Brexit, Ireland will kind of fall away from that. And what that means is that when international companies want to trade on our venue, we have to put certain structures in place to affect settlement. So even though the shares are still technically trading on our venue, the settlement takes place in a depository interest instrument in much the same way it would in traditional markets today. There's really no difference there from traditional markets. We are afforded the same benefits and the same constraints that exist for traditional markets today. Now we've got a view on how that can change with DLT, but it's too early for us at the moment to be influencing law and regulation, but we can see how that changes in the future. So actually there's not really a reason that most countries in the world can't have their issuances trading on our venue, but the further away from home you get, probably the more costly it becomes. And then when it comes from a participant's point of view, at the moment we're passported into, I don't know, 25, 30 countries around Europe. We applied for every jurisdiction, just, for the rest of this year, if nothing else. So we can offer our services easily into each of those jurisdictions, just naturally under the kind of passporting regime that exists across the EU. And, if everyone in the UK was doing our jobs, they would definitely have voted against Brexit, because post the end of this year, what we'll need to do is we'll have to go, hey, France, we're doing this in the UK. Can we please do the same in your jurisdiction? And we have to go around every jurisdiction and say, can we offer our services in your jurisdiction? Now, depending on the countries that you go to, some require you to actively go to them and say, in order, if you want to let any person from France trade on your venue, you have to be registered in France. Whereas other jurisdictions might be like, look, as long as you're not coming into our country and promoting to us, if someone just finds your website and trades, that's kind of okay. So the reverse solicitation rules. So you need to understand reverse solicitation, the local rules, the passporting, the financial promotion rules in each jurisdiction. So it's, it gets pretty complex. So at the moment, for example, we've got a Danish issuance that hopefully is going to be admitted to trading on our platform. We understand how to get it on our platform. They've already raised money from Danish citizens. So there's no point in us admitting their security to trading on our venue if we can't also allow the Danish citizens to come and trade onto our venue.
Got it. So talking about customers, we've talked a lot about issuers. The other side of the coin, obviously, of any trade are the investors, right? The secondary markets, investor to investor. So who do you see those customers being from that perspective? Who's providing liquidity, and where do you see that that developing, and what's kind of your viewpoint on that part of it? And if you're an individual, can I go and how do I get access to the Archax platform, right? I mean, I guess I could set up with your brokerage or another brokerage firm that has a membership agreement with you. Is that kind of accurate?
Yeah, exactly. So, we kind of want to be open to everyone, everywhere, obviously, if we can. And we've got 11 or 12 brokers already signed up, willing to come onto the venue. And they're just, there's kind of a bit of a positive selection, I guess, there, because they're people that we've met at digital security events who understand the space and the like. But we've started in the last month or so reaching out
to positive selection. I'm just kidding.
yeah, exactly. Yeah, so people that kind of understand the vision, let's say, a lot easier. But we've started reaching out to broker networks and broker syndicates, and these organizations that have many brokers as members. And we've deliberately held off doing so before now because our experience from prior lives, if someone turns up and says, hey, come trade my venue, we're not open, we don't know what's trading or what the price will be, like you're going to kind of use your bullet. So we've waited. Our portal is going to be open in a couple of weeks' time. We can start onboarding clients for exchange action in Q1 of next year. So we've held off until this moment, and then we're going to start pushing it out there. So I think most likely it will be a high level of brokers on our platform, and at the moment we're only allowing professionals plus on our platform. And kind of professionals are kind of like accredited investors in the US, if you want to think about it like that, or non-retail plus. And whilst in the future we may allow retail to come via our own broker, right now the easiest way for retail to get access is by having their broker connected into our platform for trading. And our sense on the market at the moment is that we've got 11 issuers that have already signed up to trade on our platform from day one, and most of those are already coming with their own investors or some of their contacts. So there'll be some organic liquidity there, and plus we've got about 1,500 people that over the course of the last couple of years have registered for interest on our website. So and we don't want it to be a kind of big bang at the start. We're not looking for huge liquidity. We're looking for a kind of slow adoption onto the market as we kind of phase our way in, if you like. From a market maker point of view, we've spoken to all the big market makers out there. They all love the fact we're regulated. They love our connectivity. They like what we're doing. But most of them want to see us tokenizing traditional equity or trading crypto. And the reasons for that are clear. That anything they trade, there's an opportunity cost of capital. And if they, if we list one UK company on our venue that's issuing equity, it's very hard for them to hedge that off against risk elsewhere. Let's say I tokenize my house, which is an example I like to use. It's very hard for someone to buy that and quite easily hedge it. But once you end up with 10, 100, 1,000 houses in the UK, suddenly you've got something that might be representative of the UK house price index that you can then hedge more easily. So as these things develop, I think liquidity and market makers will be easier to bring into place. But right now we're working with a company called Flovtech in Switzerland as well. And all of our issuers, we're introducing to them to come up with their own agreements of liquidity. So, ordinarily they may take liquidity and cash and be able to try and generate some liquidity for our issuers. So there'll be some liquidity on our venue at the start, and hopefully that will grow over time.
Yeah, I mean, market makers and liquidity providers, they'll participate as long as they think they can get money.
Yeah, exactly. Yeah, exactly.
It's pretty straightforward. So talk to me a little bit about how Archax has kind of been capitalized, how you guys funded, to get to where you are, and what remains to be, what are the remaining capital that you think you're going to need to bring in to just kind of get you to whatever the break even is and get to profitability, basically.
Yeah, I guess we're lucky. We got 52 investors on our cap table, and I think we've raised about $9 million ish in the course of our existence now. We've got a fair amount of that left to get us to the middle of next year, where we're hoping to do a Series A, and we've been we were invested pretty early on by Alphabet, a couple of our advisors, and then we're very fortunate Spice VC, the founders of Securities came in as well. And then subsequently by the likes of Algorand and some others. So we kind of we've had some good partners along the way, and we've met some good VCs and the like. So we're kind of fortunate they've supported us. At the moment, we've got enough reg cap and enough runway. We're currently working in the UK on our own digital security, which will go live in a couple of weeks, and that will be one of the first things traded on our venue. So that's part of the reason we're opening up the portal, and that will kind of enforce the reg cap and the buffers to get us.
You're going to eat your own food.
Yeah, exactly. And it kind of makes sense, and it's a good way of doing it. It's a good way for us to test the process that someone could come to our market, raise money, be admitted straight onto our venue, all in a digital way. And we're working with DLA Piper in doing that in a legitimate way in the UK. So really a project we're really excited about. Got it.
And I'm sure if anybody's interested in learning more about investment opportunities in Archax, they can either reach out to either one of us.
Yeah, exactly. I mean, if anyone's interested in investment or anything about Archax or the space, we're always open to conversations.
So this is I really appreciate the time here, and I'm just we're at 45 minutes. Kind of want to shift gears a little bit. Do you have any predictions or themes for the industry that you want to share? I don't know, what's your I can't ask you what the Bitcoin price is because it's not really relevant, but what you have any predictions kind of for what we'll call the digital securities ecosystem?
Yeah, I think you kind of said it earlier. I think about people raising money as a security, and it's quite hard. And when they hear crypto, it's difficult. And I think we're getting to a place now where you no longer have to lead with blockchain and the technology, because people care a bit less, and you can lead with the offering itself, which makes it much more likely that people invest. I think if you start with a digital crypto, you lose some people already. If you start with, hey, do you want to invest in real estate? You get 14% a year. People start paying attention, and if you like, at the end, by the way, the registry is kept on a blockchain, they're going to care much less if you've hooked them. And I've seen the evolution of that change, and we very much try and put our narrative that way. I guess the big prediction for us is the next 5-10 years, every single security is going to be issued natively on chain. I've no doubt about it. Maybe some old securities, and in some jurisdictions it won't be, but you can already see the momentum shifting. I think with the pandemic and with the Libra issuance, you've seen a real acceleration in central bank digital currencies as well. It's a dead hot area right now. I think the regulation is going to come in hard on existing stable coins. I don't think they satisfy in the same way they should existing regulations, and as a result, until you have a kind of electronic money, if you like, that can interoperate with blockchain, it's kind of holding back digital securities and settlement from being everything it can be on chain. So I think hopefully we'll see central bank digital currencies becoming a bit more mainstream over the next couple of years, and that will start really accelerating payments and security settlements. So probably that's the big prediction for us, is all securities moving on chain and all payments moving on chain. And then I guess kind of in a smaller way, the area that really excites us at the moment is hedge funds as well. Hedge funds, alternative investment funds. It's obviously our background. For years, AML KYC has been clunky there. Subscriptions, redemptions have been paper based. There's no secondary market really. If it exists, there's huge haircuts. All of those things have pretty much been solved by crypto. Subscription. Using electronic subscriptions, redemptions, having automated AML KYC, having secondary markets like ours where potentially professionals can transact, can really disrupt that industry, especially start bringing liquidity to some of those illiquid funds. And that's a real hot topic for us at the moment. And hopefully we're going to be generating our own range of funds that will trade on our venue.
Okay. So before we get to questions, well, let's just go to questions. I do have some questions here. I got one question from John Normiel. Have you had any interaction with U.S. regulators, and how would you characterize them versus the regulators in the U.K.?
Not in my current life. I haven't. In a previous life, we were regulated by the SEC, the NFA, CFTC as well. I've always found them pretty approachable, to be honest. Maybe being on the outside going in, it's quite easy to pick up the phone and get straightforward answers to questions. We have toyed with the idea of going to speak to them, and it will certainly happen between now and next March. It's much more likely our approach in the US will be to, work with broker dealers like yourself who have the networks, have the permissions, and make sure we have the permissions to face you and you have the permissions to face us. But in the kind of medium term, we will be looking to establish a kind of branch and a presence there. So, at that point, we'll certainly be engaging with the regulators.
Got it. And then somebody asked, is Lisa Syme actually? Hi, Lisa. She asked, is Falcon X signed up? I don't know who Falcon X is, but I think it was in relationship to maybe a broker who might be.
Yeah, they're if memory serves me, they're I don't want to say a smart routing platform, even though maybe that's exactly what they are. They're an aggregation platform, or a platform that I think connects into multiple different venues. We've had a conversation with them. I think they're super impressive, actually, the Falcon X guys, from memory, because it was about 6 months ago. I just think it was too early for them to connect to us, but we've built the connectivity in the same way. Our view was that when we were at our old hedge fund, getting our portfolio manager to ever change his system would have been a real problem. So much better to build ours to connect, for them to connect into us. So anytime we can connect into any of these types of systems and hopefully offer our securities to a wider distribution network is definitely beneficial.
Got it. Okay. And question from Mark Morimoto. He's asked, are you looking to the African continent for providing services? And if so, what does that entail?
We haven't. We're not. To be honest with you, in most jurisdictions outside the UK, we haven't actively gone. Maybe US and Hong Kong to some extent, but we haven't actively gone into the areas. The approaches have all been inbound. Had one conversation around tokenization of agriculture in Africa, and creating kind of a tradable marketplace for the exchange of tokenized farmland in Africa. That was quite interesting. But beyond that, we haven't really explored, the regulation or issuers. But, we're all open to conversations, and that's definitely interesting for us. Certainly.
This is a question regarding how much would it cost to launch a crypto ETF on your platform? Well, first, could you launch a crypto ETF on your platform? And if you did, what would be kind of the upfront cost and ongoing cost to doing so?
Yeah, so I guess so I'm not sure if the question just means our costs or the total legal costs. So
I think
I'll
it
give
means just I mean, let's assume it's just the cost relevant to you,
Yeah, so the cost of
not to.
listing on our venue is £20,000 at the moment anyway. So that's, and it's a non-discriminatory venue. So if someone comes to us and, they pay the fee and pass the rules, then they'll get admitted to our venue. If, just we've been looking at ETFs lately. It's obviously it's a really exciting area. I think Grayscale costs 10 billion today, not as
Yeah.
an ETF, but as an example. And across Europe, when you're looking at an ETF, the most common structure is a UCITS structure, and there's certain rules around the number of issuers. So it's hard to launch a pure Bitcoin ETF across Europe, but it is possible that you could launch, I think, a crypto index product. So we've been looking at launching that on our venue. But yeah, we're connected into Crest, or we shortly complete that. We're on the Swift network. ETFs trading on our venue would have an ICing, be distributable, be tradable cross venue. So we're really excited about that. I mean, if someone out there is building one and they want to talk to us, then we're definitely open to that conversation.
Got it. So I think we've got all of our questions in. So I don't want to push you too many, much. Oh wait, one just came in. Any advice for students thinking about breaking into this new-ish area from J?
Yeah, I mean, if they're available right now, we've got capacity. If they're in the UK, certainly you can come with us. We're not short of projects. We're always looking for good people in a bit of a measured way. If they're just looking to learn more, then there's a bunch of good sites out there. I know A16Z had a pretty good learning site. Securities churning out pretty decent articles all the time. We've got a series of Medium articles as well. I mean, there's a lot of information out there that people can read, but I think the easiest way is, if you can, get yourself seated in an office with someone that's living and breathing it all day. And you quickly realize that there's a lot to this. We're trying to recreate a lot of segments of capital markets with limited cash in a quick fashion, and you're learning constantly about requirements and regulation and systems and blockchain and limitations of all of those things at the same time. So the best way is just to immerse yourself somewhere that's doing it.
So I think that's kind of the biggest, all the questions here. I do have one. I'm going to ask one final question. Is if you had to, part of this is really talking to entrepreneurs and other people, right? That's kind of what doing these webinars are. I mean, obviously providing information to the market about what you're doing and the emerging digital securities ecosystem. What surprised you the most? What was the biggest challenge that you've had to overcome so far that you weren't really expecting?
Good question.
So many, right?
I mean, exactly. I mean, every day is fighting fires, and you kind of need to be tenacious. And there's that phrase about, if you knew it all at the start, you'd never would have started it or whatever. And it's definitely true. Like, if someone had said to me, "You're going to have to solve all these," but problems come up, and there's rarely a problem in life that doesn't get solved one way or the other, and that exists true in law and regulation. Like, if you're sitting with good-minded people, if you've got a good network, if you've got people you can reach out, you'll find a way around it, because usually logic wins, or the regulators and the lawyers have got it wrong. So kind of sticking at a problem. I guess fundraising is the one. If you're rich from the start, it's a hard journey. It'll be a lot easier. We're very honest, and we've tried to be honest about what we have and what we don't have from the start. And we've seen people raise 10, 20, 30 million with much less, but a better story. And we didn't do that. And we're very grateful that people like Spice and Alphabet and the early investors believed the vision, because a year, 2 years later, we had investors we were speaking to, and they're like, "Oh, when you told me you were going to do that, I never really believed you, but now you're there." So whereas a lot of the other people that raised the money, then they didn't hedge it out of Ethereum, or then they went and blew it, getting the big office and everything, and then they ended up burning it away. So whilst it's frustrating grinding out that money, it teaches you to be very careful with every penny that you spend, to try and make good decisions. And if you kind of just try and stay honest to your vision, I think, and stick at it, you still need to meet the right people. Actually, probably the one thing is, you can sit on Google all day long and find every VC that's out there, every private equity fund. You can reach out to them. You can try and customize the email. It will still sound like you're spamming them, no matter how friendly and personal you try and make it. But if you can just find a connection, if you can get an intro from someone that that's worked with you, Like, it's worthwhile spending your day working out how do I get to that person, rather than identifying that person, reaching out to them and moving on to the next one. It really is. I think probably everyone on our cap table is through an introduction.
It's like a warm intro. Yeah.
Yeah, exactly.
Yeah.
Like the 52 people that we've got, compared to, like, I don't know, the 8,000 people we've tried to reach out to. Once people know us and you connect through a trusted party that's worked with you or knows you, it just makes a massive difference when you're raising that money.
100%, 100%, absolutely. All right. So we're kind of running up. We're 5 minutes to the top of the hour, or bottom of the hour, I guess. But I wanted to thank everybody for their questions, everybody for attending. I want to thank you, Graham, for being open and participating here. I think if anybody from the audience wants to get a hold of you, what's your, where they learn, what's the website? How do you have a Twitter handle? I don't know, whatever. How would they get in touch with you if they wanted to?
Yeah, you can. Archax.com is our website. You can. There's a contact us form there. You can reach out to me. I'm Godfather on Twitter. The whole team's pretty approachable. If your issuers, I mean, even if we can't help you, we regularly get people who are looking for, payment conversions. We know people in the space, so we can connect people. We're interested in issuers. We're interested in people that want to trade on the venue. We're always interested in investors. Certainly anyone that wants to partner with a different skill but complementary skill set to us. So yeah, just feel free to reach out to us. We're pretty open and we love ideas.
Great. Well, I appreciate everybody attending. Appreciate Graham for being hospitable and answering all my questions and the questions from the audience. We really appreciate it. We will post this to the Montgomery Securities YouTube page, so it's there. It's memorialized there. We'll probably also send a edited version around so people can take a look at that as well.
Brilliant. Thanks very much for your time,
all right,
everyone.
Have a great evening. Thank you very much. Thanks everybody for attending. Bye now.